Hey everyone, Coach Investor back to another video for today. So let's have a quick update on Adyen. Remember the fintech player that crashed over 50% after it reported their first half of the year results. This is a company that reports earnings first half and second half of the year. Now on November 8th, we had a business update where they also gave us the numbers for Q3, which is something that we usually do not get. But they did that to give a bit more context on how the business is doing right now and what their outlook, what their goals are for the next coming quarters and next coming years. Now, since the lows, since the stock crashed over 50%, since the lows, the stock rallied up 70%. Of course, large part of that rally happened after that business update. So we're going to have a look at what they actually told us, some comments from some analysts as well. But first up, let's start and look at the stock devaluation itself. So currently year to date, it's still down 16.6%. Over the last 3 months, it's up 40%. Now has a market cap of 33.3 billion euros. Yes, this is on the Amsterdam exchange, but you can also buy it in USD. Currently, it's over 1,000 euros per share. Now, if we look at forward PE here compared to its 3-year mean, we are still lower, but as you will see, it's now 48 times, which is obviously not that cheap. But as I said before, usually these types of companies never trade as a cheap valuation. We've seen that with plenty of other companies as well. Usually great companies get a premium. Always, even after it crashes, it was still trading at around 30 times earnings. So never got really as cheap as you would think. Then with the rest, EV to EBITDA, price to sales, it's still under its 3-year mean. Price to free cash flow, that's the one that's basically at the 3-year mean. If we go and look at year-to-date results, we are getting a bit closer to that mean, but the business itself is expected to accelerate in 2024. So expect some margin expansion, expect some valuation compression, in my opinion. Now, of course, some of you might say, great company, I know, but to me, it's just too expensive, especially if we look at the likes of Square or PayPal or StoneCo, some of the other competitors in fintech industry. Of course, most of those companies do different things with some similarities as well. But you might say this is just too expensive for me, I'll pass. But hey, great company regardless. And I can agree. I can 100% agree, especially in the current state of the market. Yes, it's true that there are other great companies that are trading at a much lower valuation, with maybe risk reward wise, the reward is much bigger than right now with Adyen. Fine, fair enough. But I just wanted to point out that Adyen still is a great company that will perform extremely well because of how the business is being operated from top to bottom. This is just world-class execution, world-class management. We're going to have a look at those numbers and a bit more comments there as well. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So let's first start off with the business update. So these are numbers for Q3. So for processed volume, that was 243.1 billion euros. That's up 21% year over year. Net revenue at 403.6 million euros in Q3. That's up 22% year over year. And on a constant currency basis, that would have been up 26%. Now remember, the reason why it crashed is not because it wasn't growing anymore. It was still growing 21% if I remember correctly, but growth was slowing down. EBITDA was actually down, I believe 10% or so year over year, but that's because it is a strong company. And that strong company can start to invest more when times are tough, which is why we saw that decrease and the deceleration in growth as well, which is also why a stock with such a high valuation, with such a high multiple, got crushed. But now that we've gotten an update, the market is saying, okay, you know what? Here, you get that premium again. So let's continue here, some business updates. Digital, unified commerce, and platform. So with digital, volumes were up 21% year over year. Underlying growth trends remain stable compared to those seen in the first half of the year. including the US digital volumes, which continues to grow faster than the region's market. As for the unified commerce, process volumes were up 25% year over year. The first tap to pay on Android transactions went live in August, with the solution expected to soon pilot with major unified commerce retailers in North America. Then as for platforms, those volumes were up 15% year over year. Excluding eBay volumes, platforms showed continued momentum of 120% year over year growth. And here comes the comments on the investments. So people and culture. We are in the final months of our accelerated investment phase. In Q3, we added 175 FTEs to the Adyen team with a continued focus on global expansion and scaling our tech teams. In Q4, we anticipate bringing on at a maximum Q3's numbers of FTEs. As of 2024, our scaled back hiring plans will center around building out our global offices, further growing our commercial teams in key markets and tech hubs. And so, looking forward, net revenue growth, they aim to grow net revenue annually between the low 20s and the high 20% up to and including 2026. As for the EBITDA margin, they aim to improve EBITDA margin to levels above 50% in 2026 and expect to benefit from operating leverage inherent to their business model. So, of course, now you understand why suddenly the stock went up after that business update. I mean, the market was skeptical, the market had a lot of questions, and well, in one day, those questions and then some were answered. Now, I do want to add some extra context here from Brad Lyons, head of research at BWG Strategy. He also gave us some insight from Goldman Sachs' view on Adyen. So Goldman basically says here, in our view, Adyen remains the best positioned payment vendor in our coverage, with leading technology and multiple growth drivers spanning unified commerce and platforms. We remain confident in Adyen's land and expand strategy, with existing customers driving share gains and growth from new customers across the three pillars of digital, unified commerce, and platform. With regards to North America, they continue to expect North America growth to improve to a level in line with the group average over the medium term. On the other hand, they expect strong growth to continue in Europe, Middle East, and Asia, where in our view, Adyen's competitive positioning is strong and the market remains fragmented by multiple currencies and payment methods. Then they talk a bit about the Adyen platform and the three key factors. So one is market growth. Given the platform customers are themselves in a phase of strong growth, the company expects the growth momentum, platform volume growth ex eBay was approximately 80% year over year in both the second half of 2022 and the first half of 2023. And as we've seen before, 120% year over year in Q3 2023. That will be driven not only by growth in the new platform customers, but also by existing ones. Number two, wallet share gains within existing customers. With under 20% wallet share within existing platforms, Adyen sees significant potential for growth to come from wallet share expansions. And number three, new customers. As per a study done by the company, only 34% of small to medium-sized businesses use platforms, with approximately 75% of those surveys expecting to utilize platforms in the future. By the way, I highly suggest you go and follow Brad Lyons on X. Great account to follow with a lot of valuable information. Then last thing here is the graph. Of course, huge red candle. This is on the weekly chart. Huge red candle after they reported the first half results, then followed by some more weakness in the market and also some more weakness in the stock. It did not really respect my support line, which I thought would be 700. We dipped under it quite a couple of times, but then, of course, we went up and up and up. After we got that business update, we were, of course, oversold during that period back in September, but now we're making our way back up to that 200-day moving average, which currently sits at $1,135. And despite the huge run-up in the stock in the last couple of weeks, RSI is still pretty neutral at around 51.6. So overall, what can we learn from this? Great companies can have a premium compared to others in the same industry. Yes, sometimes if there is a weakness, they will get punished way harder than others, as we've seen with Adyen, but it still remains a great business. Just because one quarter, or in this case, one first half report wasn't as great as expected, doesn't suddenly mean that the whole thesis has changed. No, the markets usually act irrationally, as we've seen here. It was oversold. and then some, still a quality business. Yes, it is trading and was trading still at a premium compared to others. But again, as you've seen, one quick update one day where they talk for close to 3 hours about the business, about the future growth, and suddenly the market is back in and the stock soars 70% from those lows. So yeah, for those of you that have Adyen in their portfolio, for those of you that have listened and maybe added to your position, congratulations. For those of you that have maybe, like myself, Square, Block, or PayPal, or many others, yes, the fintech industry is projected to do much better in 2024 as rates come down, as the economy becomes a bit better. I mean, we've seen a couple of numbers that came out with regards to Black Friday. Spending is on fire. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.